What's going on? Today we're breaking down income verification and employment because it is a very critical topic. The reason I'm doing this video is because I've been getting a lot more people calling, running into issues after they've been go under contract on a property because of income verification issues or transitioning jobs. So I'm going to break that down to you guys today. It's going to be okay. I promise you that. It's just really, you really need to understand that, especially if you may think you're in a tricky position. But even to be honest, people that may think they're okay do run into some type of issues. So in a general statement, lenders do need to verify a source of income, right? You do need income to qualify for a VA home loan. No matter if it's having VA disability income, having W-2, self-employment income, military income, all of that, and how it transitions if you go in between those, because people oftentimes do. And sometimes you have income that a lender doesn't need to use in order for you to be able to do what you want to do. It may seem somewhat contradictory, but it definitely works in different scenarios. And I'm going to break that down in today's video. So let's just go over some of the basics of what a verification of employment is. It basically, that happens after you go under contract. A lender does their pre-qual, pre-approval, whatever you have, right? They get all your information, your pay stubs, bank statements, all of that fun stuff to actually do the pre-approval or pre-qualification. And I'll drop a video down below. We did a whole video around that. Once they get that, they give you the document, you go out looking for properties, offers accepted, and now you start the underwriting process. And this is where a verification of employment is going to be requested. Now, people will have messed up pay stubs and even verifications of employment. They use things like the work number, or they'll go online. Your HR department has a portal that you can go into and request that documentation. The challenges come up with that is if the employer or the accounting company is not reporting accurate information. We've seen it time in, time out. So that's why you want to have a direct contact at HR that can help facilitate that piece to get a letter of explanation. Then hopefully they update your pay stubs moving forward so you can get a new pay stub before you close the transaction, wrapping everything up. Now, this is also important if you work as a remote employee. Like, let's say you live in Illinois, but you want to buy a place in Florida, and you're a 100% remote worker. Well, your HR department will have to verify that, yes, you're a 100% remote worker. And the other time that you can basically buy a property anywhere is if you are a pilot working for an airline company. Those are kind of like the two caveats to be able to basically live anywhere, but still you have to qualify and still needs to go through underwriting to be able to do that. These requests are formal and also that's informal. You can say informal would be like a phone call. So one document you provide is like a pay stub. You provide W-2s, right? All those things verify income. Tax returns, that verifies income as well. And then a verification of employment form from your employer will also verify, like, yes, you're employed. And then before closing happens, you also will, the lender's going to call your employer to make sure you are working. That's typically just through a phone call. They can call someone like your supervisor, sometimes even a coworker, but that really depends on the situation. And that's why you have to gather these documents ahead of time. Now, if you're on active duty, you can provide, or a government job, because a lot of times they'll offer an LES, you do need to grab that documentation. And I would say, to be on the safe side, 2 years of tax returns, 2 years of W-2s. And remember, if you have some type of side gig or 1099 income with that, make sure you're providing those 1099s or business returns to the lender, which leads us to self-employment. This one can be a little bit tricky. And I'm kind of like, overall, you should be talking with your accountant or have a CPA. Highly recommend it. I'm not one, but I do file taxes. So you really want to understand how you filing your taxes the way you do impacts your ability to get financing, because unfortunately we see a lot of people that are self-employed along with, W-2 income or sole self-employment, or if they have multiple properties, a lot of times they disqualify themselves because they expense too much on the property, and now lenders can't use it and they can't qualify. We're going into the tax year right now, right? It's going to be a couple months away. Set yourself up for success by getting all your documentation early on so you can set yourselves up for success to be able to buy more properties. Now, let's talk about the impact a job change has on your qualification, because we run into this a lot with either transitioning veterans or spouses, which let me touch on that for a brief second. The cool part, the VA loan is very flexible in its qualification requirements, okay? Spouses get to enjoy the same benefits for qualification as a veteran does, just opening up that opportunity to be able to qualify. But I'll kind of go into a couple of those things a little bit later after we talk about the impact a job change has during the loan process. Now, there's a couple things that go into this. One, for the most part, it is okay to switch jobs. Now, a lot of disclaimers to this you can say, and it's all very situational to your employment. I'm going to give you guys a couple of examples. Let's say you're a teacher and you're transitioning to be you're a pre-K teacher transitioning to another pre-K position. Normally, that's pretty relevant. It's relevant. It's the same job. It shouldn't be a big deal. This is what happens with the caveat. And you don't even have to start the new job yet in order to be able to technically use that income from the new job. But this is where people get thrown off guard, and this has been happening the last couple of months. If you have an executed job offer letter, meaning you signed the employment letter and the employer and employee both signed the letter, they get provided to the lender and say, lender, look, I'm making more money. This is really great, but I don't start my job until 15 days after closing. All right, that's cool. Now we need to verify it with your HR department, and that's where the issue comes in. One, you have to have an unconditional hire, meaning there's nothing pending in order for you to start. That's the challenge, because most of the time they're going to have some type of provision in there that you need to finish before you start the job. So you really want to think about that ahead of time. And of course, you want to be able to take better opportunities, especially even if you're going through the home buying process, because it opens up affordability across the door. So if you're thinking about switching jobs, try to do it ahead of time. Obviously, you can't control a lot of things, but you want to be able to get ahead of that. So again, you put yourself in a better picture. But normally, when people do this, they'll already be starting their new job. And again, not a big deal. A lot of scenarios where you are, let's say, going to school full-time, you transitioning into the workforce, that school year, all those school years will count as a history. If you go from part-time to full-time, that's relatively okay. That's normally okay. If you're going from self-employment to regular W-2 employment, same thing, normally it's okay. But if you go the opposite to 1099 self-employment income, you typically do need 2 years with a 1-year rule exception to that. But again, all of that's going to be in the VA handbook. So let me pull that up so you guys can kind of see what chapter I'm talking about. This is going to be chapter 4 of the VA handbook. And I'll also link that down below so you guys can see it. But as you see, it's going to have everything outlined in here, from general underwriting information, income, what's required, assets, debts owed, which is also a caveat. If you do have federal debt, like let's just say you got out of the military, you didn't pay your clothing, whatever, you didn't return, now you have federal debt. If you're behind on student loans, if you had let's say you took out an SBA loan, which is a government loan, then you could be losing your VA benefits, and that's done through what's called a Kavers report. But anyways, this in here is going to kind of give you that whole analysis, pretty much everything you could imagine that you'd want to know from a lending perspective, including manual underwrites and regular interest rate reduction refinance loans, what that requirement looks like. They look at this, what we just talked about. Spousal income is a relevant, income from non-military employment, right? They kind of break it down right in front of us to let you know what is required, right? They're looking for 2-year employment history, but again, they're looking for, okay, can you document it? What circumstances are coming about? They talk about the use of verification services, right? What information a lender is going to require. And again, this is something you guys could do on your own. You probably don't want to because it's somewhat boring. And also you have to be able to take experience with this lending part and combine it with this to be actual practical. But a lot of people run into situations where lenders will deny them for whatever reason, and they'll go back to this and say, hey, and they'll reach out to us and say, hey, David, can you help us out? This is what I'm reading in the handbook. Yes, we can do this. or no, this is a no-go and this is why, because a lot of times you need to go a little bit deeper in the explanation, and then we can help you out. Which, by the way, if you guys want to schedule a call with me, and I actually do take these phone calls, the link is down in the description, and I'm happy to walk you through it. Right now, kind of show you, hey, how long verification of employments are good for. Again, these are all good things you may want to know, and also alternative documentation as well. What's relevant, what's not relevant. And it kind of goes through, hey, if you got less than 12 months of employment. So like this stuff isn't really hidden. It's available. And a lot of times too, underwriters kind of have have a say at the end. See, they'll even talk about income from overtime work, part-time work, right? Typically, you need to have 2 years of that income to use it, which is another big factor. Because people will be like, hey, I just started my job. I'm working tons of overtime. Hey, can I use all this income? Well, you can't, but if it's been less than a year, more than a year, but less than 2, you can offset short-term debt. This is why understanding the product and knowing how it works is a huge benefit. I would say, more to lending institutions, but you as a consumer, as a veteran, if you want to learn about it, this is a great way. So hopefully you guys got a lot of good takeaways. Please share our contact because we want to give as much information to the veteran community and empower them to be able to make decisions. And make sure you guys hit the like and subscribe button, and I'll catch you guys soon.